The US key stock indexes closed mixed yesterday. High-tech stocks again logged the biggest growth, while commodity stocks lost some ground despite high commodity prices. Anyway, it's too early to make conclusions. Market participants are still revising their portfolios ahead of the ADP employment report that is due tomorrow. It will clear up market sentiment and shed light on the official data that will be released on Friday. We see that the high-tech sector is a propulsion plant of the whole stock market. It benefits the S&P 500. The index now stands at 4,290 points. Following a winner's streak for 3 days in a row, the index hit new highs on Monday. The S&P 500 could meet resistance at the round level of 4,300, where some investors could take profits on long positions. In this area, the index could make a downward correction to 4,257, followed by a new bullish impulse. A more accurate forecast will be possible after the publication of macroeconomic data later this week. The US dollar is still hesitant to follow a clear-cut trajectory. Which force will break the balance? Inflationary pressure or the Fed's ultra-soft monetary policy? Meanwhile, the US dollar is being pushed up and down by these two opposite forces. Nevertheless, experts share the bullish long-term outlook for the greenback. This outlook is propelled up by the prospects of imminent tightening of the Fed's policy. No doubt, once the US Fed revised its stance on monetary policy, investors are braced for a transition from active stimulus to neutral monetary policy. The hawkish Fed creates bullish prospects to the US dollar. Today, its index is trading at about 91.90. It's expected to trade in the corridor of 91.50 to 92.30. The greenback is holding the upper hand against its Canadian rival after yesterday's fall in oil prices. Despite the solid drop of $2 in oil prices, analysts are betting on the bullish oil market. It means that the USD card pair is likely to trade in the corridor of 1.22 to 1.25. Meanwhile, the currency pair is trading at near 1.2340. Currently, it's hard to say for sure whether the crypto market is firmly on the path to recovery. In recent days, the market is regaining footing. Today, Bitcoin is trading above $36,300. There is a 50-50 chance that the number one cryptocurrency will rebound as high as 40,000, which now serves as a strong resistance. There is still a good balance between supply and demand in the range of $32,000 to $40,000. The level which will be broken first will determine a further direction. We suppose that the price will make efforts to break the upper level soon, but it will be hardly possible with their first effort. Interestingly, experts note unusual developments in the US stock market. Recently, both commodity prices and stocks are trading higher in parallel. Stock indexes and commodity prices have grown 8% and 13% respectively for the same period. On the one hand, it proves robust growth. On the other hand, it indicates that the stock market is close to overheating. On the whole, the current market situation is quiet. The economic calendar is loaded with the macroeconomic data in the second half of the week. Technically, the US stock market is ready for a further rally. At the same time, prices of shares are at uncomfortably inflated levels, so that there are no rooms for the further growth. Thus, it makes sense to price in a downward correction soon. Don't miss our reading news to have your finger on the pulse of market developments. Subscribe to our channel and see you tomorrow.